Corn limit is up and soybeans closed for corn and soybeans in the US and Brazil exporting soybeans to America. Here, the one who will comment that will be Michael Zuzolo, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. Stay tuned and don't forget to subscribe. So, Mike, how are you today? This week we were caught with some news that Purdue Farms was importing soybeans from Brazil. What is that all about?
Well, and I don't know if that has happened or not, but there was actually a second poultry producer, hog producer being talked about also importing soybeans from Brazil. So these two pieces of news, I think, are in large part, Luis, why we've seen the soybeans really come off of the major highs that we put in here in the last week or so. And last count, we've probably dialed back roughly 60 cents off of the highs in the lead month beans as we get ready to take on the May delivery process here. As we change months on Friday, we see extended limits on prices on Monday, and we go into delivery on Monday. So buckle up, the volatility is only going to get worse. And I can talk about that more in detail, but to get back to your question, we are seeing, I think, the old saying is the best cure for high prices is high prices. What I said to clients this week was the best cure for high prices is imports. And I think what we're seeing here in the United States now are these razor thin supplies of old crop corn and beans. They're vying for the commercial, whether it's the domestic commercial who needs to crush, or whether it's the export commercial who is selling to China or another country. I think we're rationing demand at these prices because earlier in this week, before the Chicago Board of Trade prices set back, our price at the Gulf hit and went through $600 a ton. And by my calculations, that was around $40 to $50 more than Paranagua. So I think we're rationing demand in the soy complex. The other big piece of the puzzle that has allowed the soybeans to rally so substantially has been the bean oil, the vegetable oil market. It sure looked like to me between Wednesday and Thursday, we probably pushed in enough longs, and enough longs now are starting to take profit before the delivery process starts there as well. So that's going to be probably a very important piece of the soybean puzzle still, because the soybean oil has been spread off against the meal, and meal's been very discounted. Crushing margins here in the United States are back to $1.20 to $1.40 a bushel after having been below 60 cents just earlier this month. So the dynamics in the soybeans are extremely fluid right now, but I'd say overall the trade in the futures market, me and my analysis included, would be I'm still more nervous about letting go of more corn than I am soybeans, because we're not talking about importing corn out of Brazil, we're talking about importing soybeans. So a competition on a global scale, I still think the corn has the better suit of cards.
Yes, indeed. During this week, analysts in Brazil were speaking that Brazil currently has the highest prices of corn in the world.
Yeah, and this is in part due to the tighter supplies in the forward contracting from last year. It's in part due to farmers not wanting to sell in Brazil because of how late the safrinha crop got planted and the weather that we're seeing in Mato Grosso do Sul and also Paraná. Those two combined equal Mato Grosso's second crop corn in terms of percentage. Typically, both of them share about 40% between all three of those countries. You have about 80 or 90% of the crop made in the safrinha corn crop. I think the other thing too, and this goes back to the Federal Reserve and what we're hearing from President Biden in terms of the fiscal stimulus bill and whether it's going to be paid for in taxes or whether it's going to be printing more money and the Treasury selling more bonds, is the inflationary mindset and the currency mindset. And we just saw right before the Federal Reserve talked, the Chinese currency hit a new 10-week high, and the Brazilian real hit a new 8 or 9 week high. So here again, I think that in part is inflating your prices down there, and that's helping us. And it's helping us a lot more in corn than soybeans.
Well, we are about to speed up with harvest in Argentina, and do you think that would help to curb those prices?
Yeah, I do. I think that the Argentine crop is expected to be very, very substantial, both in corn and especially in soybeans. I'll be eager to hear what the yields actually are, though, in the corn, because I still wonder if that drought didn't do some damage to the corn, especially coming off the wheat performance and the production that we saw in the wheat. It got hit by the drought, and it seems to me that the corn had to have probably gotten hit in some areas. So when I add everything up, Luis, other than the ethanol issue still being an issue for me because of the climate policy and the summer driving season and the global economy as a whole, when I add everything up, I still think corn is more susceptible to sharp rallies. We've got two big highs in the corn and the wheat here in the Board of Trade. 720 and a half is the high in May corn. I will be eager to see that get taken out next week. Whether it's because of crop planting issues here in the United States, whether it's because of the delivery process that takes place, or whether it's because we get some more private estimates out of Brazil and Argentina. So I'm really eager to see new highs in the corn, and I would like to see the wheat follow through as well to the upside, especially given that the wheat corn spread has gotten down to levels not seen since 2013. We got down to 35 cents premium in soft red wheat minus corn for lead month futures. We can and have gone negative before, but that was back in 2012 and early 2013. So we're really down there in the feed category when it comes to the wheat complex. So it's getting pretty important that wheat starts to find some support with the corn.
Yes, crude oil is around $65 a barrel, and Europe has not reopened yet at the same pace of the United States. But when they do, I think that would impact on energy prices.
I agree with you. I think this is one of the most nerve-wracking pieces of the economic commodity puzzle because it drills back down into the inflation. The Federal Reserve said the inflation's transitory. We're still going to go ahead and buy $80 billion a month of bonds and another, I think, $40 billion a month, or yeah, $40 billion a month of mortgage-backed securities just to keep the liquidity going. And so you see that, and then you see the 6.4% GDP that the United States registered that was just reported today for the first quarter. And you think, is the Fed right by saying this inflation is transitory? Isn't this maybe something that's going to be baked in more deeply because of these price increases? We're hearing from Procter and Gamble. We're hearing from other major, consumer outlets. Certainly the price of beef and pork in most grocery stores are substantially higher than they were last year for some key cuts. So I think this is a very, if you ask me, why do I keep selling as the market goes higher for corn and beans and wheat for my 2021 hedges, which I did more this week, it's simply because I'm not sure that this inflation is going to hang around. And I do think we've seen a third week in a row in these weekly export sales that we are curbing demand. And I think that's really important because that was one of the key features to what brought us to this point. And for the corn in particular, I wrote it down. I think we're in week 33, if memory serves me right, Luis. We're in week 34. And for corn exports, what we've actually shipped out the door, we are running at 61% of USDA's forecast. That's just too low. And so that's why I'm still hedging these markets. And then that's why I like to sell rallies instead of buy into this market at these price levels.
Yes, yesterday I spoke with a farmer from Nebraska, and he was telling me that there is a very dry weather there.
It is. It's very dry. And I think this is where you and I have talked all year about the sell and defend model because of the La Nina bull and because of the inflation bull. I think that sell and defend model is going to get more useful and more useful and more useful. And going back to the volatility issues and buckling up for more volatility, it was interesting because the corn volatility for at the money options where it was able to hit a new 2-year high, almost 41% this week we hit in corn. And in wheat, it was the highest since 2015. We registered almost a 43% at the money call option implied volatility at the Board of Trade. So we are getting up there to levels that we see during these wild weather driven crop years, which I think still is a supply weather driven crop. So I still like the sell and defend model. I will start to not recommend both buying a call and selling a call. I'll start recommending just buying a call outright if we don't get back on track with corn planting weather when it comes to re-owning the corn. I think it's worth giving yourself unlimited upside potential in the corn if we fall any more behind on planting, because we came in at what, 17% this year, this week. That compares to 20% on a 5-year average. You get to May 10th, and if you're not caught up, you're going to probably see some acres move from corn to another crop like soybeans just because you're getting late in that planting window.
Yes, and jumping into wheat, we are seeing that we have reported, I should say, that China is shifting from corn to wheat for the meals. And but right now, the Ukrainian harvest is starting. So, what would that mean for the short term?
Yeah, this is where I think you're going to see the market continue to be a little bit nervous about taking wheat too high unless the corn remains in a very strong bullish mindset. And I think this is why both of those things are why we've seen the wheat corn spread collapse like it has. It can go lower at this point, Luis, but I don't think it will for another 30 days or so. I think that it feels pretty good about where it's sitting. Same with the meal. Part of the reason why the meal has been sold off has been, as I said, about the bean oil, but it's also because we are seeing major feeders shift out of meal and try and find a substitute that's cheaper. I think that too is pretty much priced into the market though at this stage of the game. So my take on the wheat is that it has limited downside as long as the northern plains and Canada stay as dry as they are, because there's a lot of hard red wheat in the South Dakota area, and there's a lot of, obviously almost all the spring wheat is in North and South Dakota for the United States. And so those two classes of wheat could hold up the whole market. And I think that maybe is what happened on Thursday. Why did the wheat turn around and become the leader to the upside? I think because it was led by the spring wheat, which is the old Minneapolis wheat contract. And I think that's almost completely due to the drought monitor coming out and showing a terrific drought, not just here, but even Canada talked about their issues in Manitoba and Saskatchewan, and how they are looking at a smaller wheat crop, and it could be pretty rough if they don't get some rains here pretty soon.
And this year is a different year for Australia as well.
Yes, it is. They're looking at bigger acreage base, but I'm not sure they're expecting to get much more in terms of production, because the production number really came in big compared to what was expected. And I think they're a little bit more worried about in Australia about La Nina returning here in a few months. So that'll be something to watch very closely, especially if China and Australia get back on track with their trade, because China's been buying Australian wheat, but they've been trying to source it in other places as well because they've had some trade frictions between those two countries.
Now, getting into the livestock market, we spoke during several programs that there would be an increase on demand by the second half of the year. Isn't that happening already in the United States?
Well, I think it is, but it's not happening very fast when it comes to the beef. It still seems as though the pork and the chicken is really taking much market share still at this point. In fact, McDonald's just came out today and talked about their earnings, and they introduced three new chicken sandwiches at their restaurants, and they said that essentially the sales blew the doors off their expectations. And that's only going to come at the substitution and the effect of not eating as many hamburgers. So I still think there's a beef demand issue price wise, and also from a standpoint of taste and preference with some of these new features. But I do think the supply side of the beef market, the feeder cattle and the fat cattle supplies, are very well balanced compared to the futures price. So I think we are getting close to a seasonal low, if not trying to carve one out right now. But we've seen pretty clearly, Luis, and this is interesting from the standpoint of the wheat as well. If you look at the feeder cattle minus the corn, or a feeder cattle chart against a corn chart, and you look at a wheat chart against a corn chart, they look very similar to one another because both wheat and feeder cattle are down to levels not seen since 2012, 2013 in their relationship to corn. So I want a low in the feeder cattle, but I know I've got to watch corn very closely to be able to figure out whether that low is probably in or not. I think once the low in feeder cattle is in, though, the fat cattle will easily go higher. Because the cattle spread is so low. I think we got down to $15 when it came to the front lead month cattle minus lead month hogs, plus the cattle feeders, the feeder cattle spread minus the live cattle spread is very low, multi-month lows there too. So I guess I'm thinking that as soon as the corn high is in, the feeder cattle can ignite the whole cattle market. Hogs maybe continue to follow that buying of the pork and buying of the beans. The funds continue to buy and sell hogs and soybeans pretty, regularly. They trend pretty nicely together still.
Pretty sharp analysis from Mike Zuzolo. Thank you.
Thanks, Louise. Have a great week.